Hello everyone, welcome to this fifth module on goods and service tax filings. In this module, we are going to learn about the GSTR-3B return. In our previous module, we learned about the GSTR-1 return, that is the return for outward supplies. So in our previous module, we learned about the GSTR-1 format and structure. We studied the data preparation of GSTR-1 return, filling of data in each table of GSTR-1 return. We also learned about the HSN summary and the document summary that is to be disclosed in the GSTR-1 return. Then we learned how to upload and validate the GSTR-1 return on the GST portal. Also, we learned about the nil filing of GSTR-1 return. So now let's proceed with our today's topic, that is GSTR-3B return. So in this module, we are going to see about the tax payments and the summary of GSTR-3B return. So in this module, we'll cover topics like format and structure of GSTR-3B. Then we will see how to compute tax liability in GSTR-3B return. Then how to claim input tax credit in GSTR-3B. We will also see how to set off the liability for the reporting period using the cash ledger and the credit ledger. Then we will also see a live example of filing of GSTR-3B return, and we will also see the challan generation and the payment thereof. Then we will see how nil return of GSTR-3B is filed, and finally we will see how to validate and reconcile GSTR-3B with books and the GSTR-1 return. So let us proceed with today's topic. So today we are going to learn about the format and structure of GSTR-3B. In this module, we are going to see what is GSTR-3B, who should file GSTR-3B, and what are the importance of GSTR-3B compliances. So let's start with the format of GSTR-3B. What is GSTR-3B return? GSTR-3B return is a summary return under GST. The data in GSTR-3B gets auto-populated from the GSTR-1 return for the reporting period that has been filed. It was introduced as a stopgap return until GSTR-1, 2 and 3 can be fully implemented by the GST department. So now all three returns have been fully implemented by the department and the portal is working smoothly. So what does a GSTR-3B return includes? It includes outward supplies details, then it also includes inward supplies falling under the reverse charge mechanism, then it contains the input tax credit data, and finally tax payable and paid by the taxpayer. So who should file GSTR-3B return? All the regular taxpayers are required to file GSTR-3B on a monthly basis except for those who have opted for quarterly return and monthly payment scheme. QRMP scheme filers are required to file quarterly GSTR-1 and GSTR-3B return but are required to pay the taxes on a monthly basis based on self-assessment. So who can opt for QRMP? Those taxpayers whose turnover in the preceding financial year has not exceeded rupees 5 crores. This we have already covered in our previous module. So if the aggregate turnover during the ongoing financial year crosses the 5 crore threshold, then from the next quarter he shall be ineligible to opt for QRMP scheme. Then who are not required to file GSTR-3B returns? Composition dealers, they are required to file CMP-08 instead of GSTR-3B return. Then input service distributors are also not required to file GSTR-3B return. They are required to file GSTR-6. Then NRTP, non-resident taxable persons, are also not required to file GSTR-3B. NRTPs are required to file GSTR-5 instead of GSTR-3B. Then OIDAR service providers. What is this OIDAR service providers? They are it stands for Online Information Database Access and Retrieval Services. They are also not required to file GSTR-3B. So such service providers, if residing outside India but providing services to Indian customers, then are required to file GSTR-5A. But if such service providers resides in India and provide services within India, then they are required to file GSTR-1 and GSTR-3B as per the filing cycle. Then TDS deductor or collector shall also be not required to file GSTR-3B as they have obtained TAN based registration and they need not file any GSTR-3B return. So next, what are the due dates for filing of GSTR-3B return? So the due dates for filing of GSTR-1 return for those who have opted for monthly filing is 20th of the succeeding month, whereas for those who have opted for QRMP scheme, the due dates are 22nd or 24th of the succeeding month depending on the states. So the GST department has notified the states for which these two dates are applicable. Then nil return filing, even in case of no transaction or no sales, then also GSTR-3B nil return is required to be filed by the taxpayer. Let us see the format and overview of table 3.1 of the GSTR-3B return. So there are 5 columns in table 3.1 of GSTR-3B. This table contains details of outward and reverse charge supplies. So in table 3.1a, the outward taxable supplies other than zero rated, nil rated and exempted supplies are to be declared. For example, if I am a trader of bakery products and I have made sale of rupees 1 lakh towards biscuits which are taxable at the rate of 18%. So this transaction will be disclosed in table 3.1a. Next is 3.1b, that is zero rated supplies. So in this column, the data related to exports or SEZ supplies or supplies to export oriented units are declared. Again, I have made supplies of 1 lakh rupees of biscuits to export oriented units or special economic zones. Then I will declare the sale transaction in table 3.1b column, but no taxes will be imposed. Then 3.1c, in this column we have to declare the other outward supplies, that is nil rated and exempted supplies. So if I have made a sale of bread amounting to rupees 4 lakhs during the reporting period, since bread is an exempt item, it will be declared in table 3.1.c. Next is 3.1d. This contains inward supplies liable to be charged under the reverse charge mechanism. For example, I have availed the transportation services of a GTA, that is Goods Transportation Agency, and the amount that has been charged from us is rupees 10,000. So the taxes on this 10,000 shall be borne by us and I have to pay the taxes and avail the input tax credit. So such inward supplies will be declared in table 3.1d. Then non-GST outward supplies. Those supplies which are not within the ambit of GST are to be declared in this column. For example, a trader who is trading in petroleum products or alcohol for human consumption, and along with this he is also trading in some taxable goods, that is for example lubricants or maybe some snack items, then the taxable products will be declared in table 3.1a, whereas those products that are not within the ambit of GST like petroleum or alcohol intended for human consumption shall be declared in the non-GST outward supplies, that is in table 3.1e. So next, table 3.2. So in this table, interstate supplies to specific person like unregistered person, composition dealers and UIN holders is required to be declared. So the total turnover during the reporting period has to be declared in table 3.1, and out of such total turnover, the turnover that pertains to unregistered person, composition dealers and UIN holders is to be specifically declared in table 3.2. So this turnover has to be declared with a breakup in terms of state and rates. Next is table 4. This table contains data related to input tax credits. So this section has been divided into 4 parts. First is ITC available, next is ITC reversed, then net ITC, that is ITC available less ITC reversed, and finally ineligible ITC. So table 4A contains data related to input tax credit. Such input tax credit is available from import of goods, import of services, then inward supplies liable to reverse charge. So we have to declare the tax liability due to reverse charge mechanism in table 3.1D. The corresponding input can be claimed here in third column of table 4A, that is inward supplies liable to reverse charge. Then inward supplies from input service distributors, and finally all other input tax credit is to be declared here. Next is the input tax credit reversed. So reversal of input tax credit as per rule 38, 42 and 43 is to be declared in the first column of 4B, and in the second column all other ITC that needs to be reversed is required to be disclosed. So in first column, that is as per rule 38, 42 and 43, input tax credits that are related to personal expenditures or input tax credits availed against the supply of exempted products and so on are required to be disclosed here. And in the second column, other input tax credit like the ITC claimed from the supply of such products that pertains to a vendor whose payment has not been made within 180 days are required to be reversed in others column, which will get transferred to the ITC reclaim ledger, and once the payment has been made to the vendor, we can again claim such input tax credits. Then net ITC, this will be the difference of column 4A and 4B, that is ITC available and ITC reversed. Then in column 4D, there are certain inputs that are not eligible to be availed. Such input tax credits are required to be declared in other details, that is ITC reclaimed, which was reversed under table 4B2 in earlier tax period. And next, ineligible ITC under section 16(4) and ITC restricted due to place of supply rules. So next is section 5, that is table 5 of GSTR-3B. So in this section, exempt, nil rated and non-GST inward supplies are required to be declared. This section has been introduced with an intent to keep a transparency and track of unregistered inward supplies by taxpayers. So under this table, supplies from composition dealers and exempt supplies and nil rated supplies are required to be disclosed in terms of interstate and intrastate movement of goods. Also, non-GST supplies are also required to be declared in this table. Then section 5.1, this consists of interest and late fee of previous tax periods. So the interest on late payment of taxes of previous period is auto calculated by the system and it is auto populated in this section. Also, the late fee to be paid on the previous period filing of return belatedly is also auto calculated and auto populated in this section. Then section 6, that is payment of taxes. So the payment of taxes is required to be declared in section 6. The payment of taxes can be in the mode of cash or by utilizing the input tax credit. So if we have sufficient input tax credit in our credit ledger, then we can utilize such credit to pay the output tax subject to rules of utilization. If we do not have any input tax credit, then we have to generate a challan and pay taxes through that challan. If we have partial input tax credit, then for the remaining amount, a challan is required to be generated and paid through cash. Also, the interest and the late fee is required to be paid in cash by challan. Next is section 7, that is TDS and TCS credits. So if government organization or notified organization deducts TDS on GST, then they shall file GSTR 7 within the due date. Upon the filing of such GSTR 7, the tax deducted will appear in our section 7 of the GSTR-3B return, and we have to accept or reject the TDS credits as uploaded and furnished by the deductor. So, credit for tax deducted and collected by the government departments or e-commerce operator appears here in section 7, and we have to accept or reject the records to claim the TDS deducted from our bill. So what are the key considerations while filing of GSTR-3B return? So reconcile with GSTR-1, then accurate ITC claim, reverse charge liabilities and timely filing. So GSTR-1 and 3B must match with each other, or if there are certain differences, then proper reconciliation should be there. Also, along with such reconciliation, proper justification for such differences must be there. Then accurate ITC claim. The input tax credit should be claimed as per the ITC rules, and any reversal must be made on timely manner so as to avoid any interest. Then reverse charge liabilities. The reverse charge liabilities must be declared and corresponding inputs must be claimed in the GSTR-3B return. Timely filing. Timely filing allows proper compliances and avoiding penalties and interest and late fees. Then common mistakes to avoid: incorrect tax amount. Generally, GSTR-3B should not be modified, as the values in GSTR-3B gets auto-populated from GSTR-1 return. So, there should not be any mismatch between GSTR-3B and GSTR-1. Then ITC on block credits should not be availed, and if availed inadvertently, then must be reversed in the next reporting period. So conclusions: GSTR-3B is a vital aspect for the proper compliance under GST. Proper compliance leads to avoidance of interest, penalty and late fee, along with notices from the department. Then accuracy ensures smooth credit flow. So accuracy in input tax credit and disclosure of outward supplies properly in the GSTR-3B returns ensures the smooth credit flow to the taxpayer. So that's it for this session. We are going to see the filing demo and error rectification in the upcoming videos. So thank you.